All right. Hello, everybody out there on YouTube, LinkedIn, and Twitter. Thank you for joining us for this CNBC Equity and Opportunity live stream. Again, we're streaming on YouTube, LinkedIn, and Twitter right now. I just want to give everybody a chance to get in the room. Today, we're discussing financial literacy and financial education in communities of color on the CNBC Equity and Opportunity live stream. We're streaming on YouTube, LinkedIn, and Twitter, giving everybody a second just to catch up. And let's get into this topic just for a second. You know, for years, we've had entrepreneurs like John Hope Bryant and R. Donahue Peebles that have authored books. They've been compelling voices for wealth building and financial education in communities of colors for decades, really pushing communities of colors to educate and empower themselves financially. There's also a new wave of female authors. We have to be inclusive, who are focused on financial literacy and wealth building. They include Tiffany Aliche, the Budgetnista, and Rachel Rogers, just a few of these emerging voices. But how is financial education, financial literacy, wealth building, generational wealth, how has that all become a key part of the culture for the people in the millennial and Gen Z demographic? Well, to quote great American philosopher Ric Flair, what's causing all this is earn your leisure. Troy Millings and Rashad Bilad and the master investor Ian Dunlap, they've become leading voices. Their show, Market Mondays, it airs at 8 o'clock tonight Eastern, and it's grown into one of the most popular platforms to discuss business, investing, and much more. And right now, I'm joined by all three of those gentlemen, Troy and Rashad. Ian, thank you so much for being here on the CNBC live stream.
Thank you for having us.
Thank you for having us.
Thank you.
So, I mean, I don't think I'm understating it. You guys have definitely encouraged and inspired a new wave of investors and entrepreneurs and people just to think about their finances in a way they haven't before. And for me, this is kind of special. Just about a year ago was the time I actually got to be on Market Mondays. It's about a year ago today. So it was an honor for me, and I'm glad to have you guys on. So let's jump into it. A lot of people want to hear what you guys have to say about 2023, especially when it comes to investing. So, Troy, I'm going to start with you. Right now, we're seeing the markets rally a bit more than they did last year. What are you excited about when it comes to investing?
The number one thing I'm excited about is that there's people that are still in it. You know, in the pandemic, we saw a lot of retail investors join the market, which is very encouraging. And then obviously we had a pullback for 2022. But people are still encouraged. I think one of the reasons is that they've been given a lot of information. And when you get the information, now you can make educated decisions in how you're going to invest. And so, you know, a lot of times you have to go through things to understand the market, and to be in a bull market and now be in a bear one, you know, it's a unique time. But the fact that people are still in it and they're still investing and they're finding different ways and different strategies, and, you know, they're investigating and understanding different sectors, it's encouraging because, you know, 5 years ago, our community probably wasn't as advantageous to be in this place. So I'm encouraged by what we're seeing.
So, Rashad, what about for you? I mean, we're seeing, you know, tech stocks rallying a bit, but we're also seeing a lot of tech layoffs, a lot of different things going on in the world of investing and finance. What are you looking at? Is there anything that you're perhaps excited about, or maybe just staying away from? I'm hearing a lot of people saying they're staying away from mega cap tech, or they're putting their money in dividend stocks.
Well, I think investing should be a long-term game. So, you know, whenever I look at investing, I'm looking at 10, 15, 20 years. And I think when you look at the next couple of decades, the things that are really exciting are AI. You know, we talk about chat GPT a lot recently. And, you know, we just came back from Davos, and that was the discussion as far as Web 3.0 and AI and chat GPT. So companies like Microsoft, you know, different companies that are already implementing this type of technology, Tesla, I think that these will be the leaders for decades to come. You know, not to say that it's going to guarantee to be the hot stock in February, but, you know, technology is far from dead. Technology is only going to become more and more prevalent in our life, if that's even believable. But I feel like it's going to become even more and more prevalent. And when you talk about Web 3.0, I think a lot of people got the misconception because they just think of NFTs and they think of, you know, a lot of things that may not be 100% useful today. But I think that there are a lot of exciting things that are happening with augmented reality, artificial intelligence, and the companies that are on the cutting edge of this will be the companies that I think will be the leaders in the space for years to come.
Rashad, any stocks you have in mind?
Well, as I said, I think Tesla is definitely when you talk about transportation, right? I think that they're in the forefront of the space. Of course, Apple, of course, Microsoft, but then you have to look at the chip companies as well, right? So Nvidia, I know that they've had a nice run so far. We talked about that a couple of days ago. Companies like AMD. So, you know, these are companies that I think when you're talking about the next 20 years of technology, they're on the forefront.
Yeah, we got some big chips earnings coming up. All right, I'm going to toss things over to Ian, aka Two Stock Shakur. Ian, we're in your wheelhouse right now. We need some names. The people watching, they all, we're a big thing here on CNBC is stock names. So hit us with some of the names you're watching or some places you would put some money in right now today in 2023.
Troy Rashad noted it perfectly. I love Apple, of course, in the AR and VR space. They're going to start to be a competitive force that people have to worry about. Microsoft, big investment in ChatGPT. I think we're going to see, although they have the $42 pay version now, I think we're going to see an enterprise version probably come out next year. Love Tesla, NVIDIA, Eli Lilly on the healthcare side. I absolutely love. I think as we are coming out of the COVID era, we have seen there's a lot of weakness in the United States and globally around preventative disease measures and then having protocols in place for when we do go through a pandemic. Eli Lilly has been incredibly well run for the last 20, 25 years. Although it's not as sexy as Apple or Microsoft, I think on the stock side, they have performed just as well, maybe even a little bit better. So those are some of the names that I do absolutely love. And then, of course, I'm a big index guy. So Vanguard's VOO, VTI, I love. But Eli Lilly is one of the companies over the next 20 years I'm looking forward to holding.
Yeah, Ian, that's a great point. I want to talk to all three of you about this. I know you guys have been advocates for index funds and have really encouraged people. In Q4, those index funds, they had a lot of volatility, a lot of turbulence. I'm sure some people put money in there and then maybe were a bit surprised. Where are you at when it comes to index investing right now in the beginning of 2023? Are you comfortable putting your money in an S&P 500 index fund or a triple Q NASDAQ 100 index fund right now?
Yes, absolutely. I mean, because if you look at it, if I have to compare America's economy and the United States stock market to anyone else, I mean, K-Web has fell apart pretty much last year as well. But one thing that I do know historically, year over year, indexes are going to do incredibly well. I think in 2020, the gains were so high, everyone thought that, hey, we can have 25% return, and now we don't need indexes. And then AMC fell apart, and GameStop fell apart, and Bitcoin fell as well. I think towards the end of the year, last year was a great time to put money in to get a great gain for sure.
Yeah, I'm with Ian on that as far as invested in indexes and ETFs. All right, when you talk about QQQ, I mean, if you look inside of it and you understand what technology means to our economy, it's a huge part of the economy. Even companies that we're not even thinking are in the tech sector probably have a technology component in it, which makes them thrive. And so investing in QQQ, I like the spider funds. I know it turned 30 last week. And so educating people around that. But, a lot of times people try to take individual stocks and, it's one of those things. It's like, all right, the volatility in that stock goes up or down, it could change your portfolio. And so we always try to encourage people to get a group of stocks like an ETF or an index, just so it's a more conservative play.
Yeah. Rashad, what about you? You a big index investor as well? Still?
Yeah, for sure. I think, my background, I was a financial advisor before this. So I always err on the side of caution. And we know that for the most part, indexes always outperform an individual stock portfolio. So it's very hard to pick individual stocks for a long term that will do well. But it's almost impossible not to do well with picking an index for the long haul. And this is something that, any investment, guru would recommend, whether it's Warren Buffett, anybody, right? Like for the average retail investor, you're going to do better long term with an index fund as opposed to trying to pick the hottest stock of the year. And even on the professional side. So we see that most hedge funds and most investment advisors don't really do as well as traditional index funds. So especially when you add in the fees. So index funds, low cost, something that is extremely diversified. And if the stock market falls apart, then that's the only way that the index funds will not do well over a 20-year time frame. But if the stock market falls apart, then we have real problems.
Yeah, bigger issues.
Yeah.
I heard you say that before. Yeah, if the stock market completely melts down, it's probably some other stuff going on we need to worry about.
Yeah.
One ETF I've been actually looking at is the WCLD ETF. It's cloud computing. It's something I cover here at CNBC. We're not really actually allowed to invest in stocks. We can invest in ETFs. Any thoughts about these? These are like high growth names. Salesforce is in there. A lot of cybersecurity names are in there. But are you more big mega cap tech and staying with traditional tech? Are you also willing to look at high growth names, and whoever has an opinion, jump in?
I think I like to err on the side of conservatism first, because of course we want the big gains. Everyone wants a year where we're up 80%, but do you want to draw down the next year if it drops 50%? So that's why I lean towards indexes first. I do like the cloud computing space for sure, but when I look there, I mean, we have to look at Amazon, what they're doing with Amazon Web Cloud Services, and then Microsoft. So even inside of those dynasties like Microsoft, Amazon, you can still have some cloud exposure there without directly having to invest in an ETF, but the ETF is solid if you do want more gains, but you have to be prepared for the drawdown as well.
Yeah. Obviously, we saw a drawdown over the past year. So companies like Cloudflare and other companies in the cloud space, they're interesting because we know that that's the wave, right? But we always look at competitive moats, and so when we're talking about an AWS, when we're talking about Cloudflare, what's the advantage that these companies have, or what's going to distinguish them to take over a company or compete with a company at that level? So these are the things when we're talking about do your research. You need to look into these things, right, before you invest in it individually. I know, Frank, you said that you looked at the ETF, but understanding the space and understanding who are the competitors and who has a competitive advantage in the space is important as well before you make the investment.
Yeah, absolutely. I mean, being an educated investor is certainly the key. Really quick, we showed a full screen. I want to actually explain this full screen. On April 4th, you want to join us for our next edition of Equity and Opportunity, where we'll be digging more into ways to bridge the racial wealth gap. You can register for that event at cnbcevents.com. You can see some of the guests that we're going to have there: Thashunda Brown Duckett from TIAA, Michael Heider from the Executive Leadership Council, and Rick Wade from the U.S. Chamber of Commerce. Again, it's our Equity and Opportunity Forum on April 4th. You can register online. There's one of those QR codes right there if you want to join us. All right, moving on. Real estate. A lot of people are looking at real estate. I don't know about you guys. I know a lot of people say, oh man, I'm hoping the prices go down. I'm going to wait for the prices to go down, but the rates are too high. And a lot of people are trying to do basically arbitrage, trying to figure out how to wait for the prices to go down and get the rates right. Troy and Rashad, I don't want to talk about too much of your business. I know you're on your own real estate journey. What do you think about the real estate market right now?
I think it's high right now, but I think that you just have to, it's like stocks, right? You have to treat every market and every home different. So you never want to buy over asking price. That's something that I strongly recommend people not to do. And that's something that has become very popular, especially in cities like Miami and Atlanta, where people are paying $100,000, $50,000, $250,000, $500,000 over asking. So that's just common sense, right? You're kind of setting yourself up for failure in a situation like that. But I would be a little cautious as to say that you're waiting until interest rates go down, because we could be in a high interest rate environment for a while. But even if interest rates do go down, then prices could actually go up. Mm-hmm. So, I think you have to look to see where you can get good buys. And I think that there's still opportunities for good buys in different parts of the country. And depending on if you're going for the investment property or for your own personal property, but either or, I think that you can still find deals. It may take you a little bit longer and you may have to have more patience, but you never want to pay overinflated prices. And you kind of know what, especially if you know a neighborhood, right? You know what makes sense for the neighborhood, what makes sense for the size of the home, and what doesn't make sense. So, it's extremely important to use discipline, because a lot of times FOMO forces us to do things that are irrational. And you see that in the stock market all the time. You saw that in crypto. You see it in the housing market, right? Where the house should be $300,000, but it's listed for $500,000, but you're scared that if you don't buy it, it's going to be $700,000. And then as soon as you buy it, then it goes back down to $400,000. So, you don't want to be underwater. So use discipline, wait. But if you see something that is a bargain, or you see something that you think is in line with what it should be, I would not hesitate to pull the trigger.
Yeah, I'll use the quote that my brother MG the mortgage guy always says. He says, "Don't wait to buy real estate. Buy real estate and wait." And it just depends on what your plan is, right? If you're doing it from an investment side or if you're doing it from a personal side, two things are going to happen. Obviously, when interest rates are so high like it is right now, I mean, they could go down and you have an opportunity to refinance your mortgage, or either you're renting it out and now you can charge rent for the property that you have. So it's just a matter of education and building your team around that. I think that's important. A lot of people will just go in situations and they're relying on people who are miseducated. And so building a team before you make a decision like that, especially in real estate, can cost you $1,000 or it can save you $1,000 or more potentially down the road. So creating a plan, but understanding, the neighborhood that you want to buy it in, and understanding the economy that we're in. And also, this is something that we actually spoke about yesterday, was understanding the town that you're purchasing in, right? Understanding who's on the town board, who's the engineer, who's the architects, the building committee, because these things are all part of the purchasing process when we're talking about real estate. A lot of times we go into situations where we have an idea of what we want to do, not realizing that, well, the town might not permit you to do these things. And so having a plan, sticking to it, and creating a team is important.
Ian, before I get to your opinion, Troy Rashad, I want to circle back with you for a second. When you're looking at real estate and the real estate environment, do you have one opinion when it comes to a residential property and a different one for an investment property? A lot of people nowadays looking for investment properties. Is there one area you think is better to put your money into right now than the other one?
I think it depends on your situation. But I would be cautious to over leveraging yourself and buying a personal home. So, you never want to deplete your savings. You never want to deplete your retirement account. You never want to put too much of your net worth. You never want to commit yourself to a mortgage that you're going to be struggling to pay every single month. That's something that's actually pretty common, because people think that they're doing something beneficial by buying a home because they're looking at it like it's an asset. But, in that case, it can actually be a liability. So I think, it's important to know your situation. And if you're not in a situation where you can comfortably afford to buy a personal home, I don't think there's anything wrong with renting with a game plan. Renting with a game plan, as far as to say, okay, I'm going to rent, but I'm going to be saving money, and this is my strategy. Or buying a multifamily home, right? And now you're actually killing two birds with one stone, because now you actually have somewhere to live as your primary resident, but you're also earning income that will be coming in from the other units that you're renting out. So in that case, you can actually have positive cash flow as opposed to a negative cash flow paying a mortgage. So that's always beneficial if you can afford to do it, and if you're in a neighborhood where it makes sense. So it's important to run your race. I think a lot of times people, financial peer pressure is a real thing.
Yes.
And, you get influenced by social media, you get influenced by your friends, your family, and you try to, say, okay, I'm 35 years old at this point in my life. I should have a home. I should be living somewhere. And that may not necessarily be your path, right? So never feel pressured to do something that you don't feel 100% comfortable in the moment.
So Ian, same question for you. What's your take on real estate right now? Do you have one take for investment property and residential property?
I think as we go through the cycle of quantitative tightening and what the Federal Reserve wants to do, I think it's pretty clear the interest rates won't come down for a bit. You don't want to, of course, like Rashad said, buy too high. I'm here in Houston. I know people that personally paid $90,000 over a house. If they would have waited 3 months, they could have got it at a discount. So you have to be very patient. And also we have to remember that houses are a product of the bank and of the financial system. So just because it's your dream home, it doesn't mean that it's a dream asset for you. It's really a dream asset for the banks. I would definitely, now is a better time. I think it's a better time to get a house or investment property now that we are in a little bit of a downward cycle, even internationally. I'm starting to look at a lot more properties in Africa and overseas. Recently just picked up something in Mexico. So I think now is a great time. I don't think interest rates are going to fall dramatically over the next 6 months to a year, but the prices are definitely going to come down. There's some deals out there. And also, you should look at that pre-foreclosure and foreclosure list. Unfortunately, there are some people that have fallen on hard times and they need to come from underneath that liability that they currently have. And you probably can grab one at a discount.
That's actually a good point. I remember back in the financial crisis, short selling was a big thing. And, it may become another big thing. A lot of people, as you mentioned, paid a lot more than the asking price for their house. People just wanted to move where they wanted to move when they wanted to move there.
Yeah.
So that's certainly something to watch. It's a good tip right there. So one more time, we want to promo our event coming up on April the 4th. Join us for our next edition of Equity and Opportunity, where we will be digging into ways to bridge the racial wealth gap. We'll be joined by Thashunda Brown-Duckett from TIAA, Michael Heider from the Executive Leadership Council, and Rick Wade from the U.S. Chamber of Commerce. Also important to note, you guys have Market Mondays coming up tonight at 8 o'clock Eastern, 7 o'clock Central. Can you give us a quick preview of what you guys are going to be talking about tonight?
Troy?
Yeah, I mean, the beautiful thing about Market Mondays is that we get to report on the daily topics. And so whether it's, the rise of Tesla over the first quarter, or the rise of NVIDIA or ChatGPT, or Microsoft, spending $10 billion, we can cover it all. I think people relate to that because it's happening right now, and they want to know about it. They want to be more informed. They want to be more educated on things that they hear and may not have a full understanding about it. So I would imagine some of those things will be on there, and we'll see how the market closes up today. We might add some more topics.
Yeah,
Frank, the question is, when are you coming back?
I got to be invited back, man.
Come on, you're family. Come on, you come anytime you want.
I know it's a high demand show. No, I'm just glad I got all three of you in the same place at the same time. We've been talking about this for about a month.
Yeah, I appreciate it.
Again, Market Mondays tonight at 8:00. Also on YouTube, Spotify as well. Anywhere else you listen to podcasts. Want to make sure you check out Market Monday. Great show. I was very privileged to be on there just about a year ago. And as a matter of fact, I even did a couple stories about when we all met back in Tulsa for Black Wall Street. Yes. And then, just kept in contact here and there. And I was lucky enough to get on Market Mondays. And I appreciate the support, guys.
It's our anniversary. You got to come back. Are you free in 2 weeks, 2 or 3 weeks? Yeah. Let's get it together with Troy Rashad and let's see when you can grace us with your presence again.
Let me know, man. If y'all want me to come to the Grammys too, just let me know. Another topic that a lot of people have asked me to ask you guys about: entrepreneurship. Everybody I know wants me to ask you about this. Is right now the right time to start a business? So much economic uncertainty. We saw so many people start businesses during the pandemic, whether they were work from home businesses or quote unquote side hustles. As we all know, more than 90%, some people say up to 95% of all Black businesses are sole proprietorships. It means it's just one person doing it, which obviously some people take to mean you should leave your job. Other people say you work your job and start your business. Some people say take out a loan. Other people say bootstrap it. Right now, today in 2023, after all we've seen during the pandemic, Ian, I'm going to start with you. Mm-hmm. What's your take on entrepreneurship? Is right now the right time to start a business?
I think the best time ever in history to start a business is when we are in a recession or depression. The key point is you have to be able to have a key advantage that no one else in the world has, and it has to be incredibly unique. So my thesis with ChatGPT is they're testing all this personal data out. What happens when they launch an enterprise version? And let's say Microsoft can go to CRM or Salesforce or Adobe and say, hey, if you lay off 21% of your workforce, our enterprise version of ChatGPT can replace the work of everyone that you laid off. Interesting business proposition. So I tell every entrepreneur, you have to create something new. So even when Troy and Rashad, and I'll segue to them, when they created their show, it wasn't a show like it. Now, after the fact, there are a few that have modeled the show format, right? But up until that time, there wasn't one that occupied that space. So my thing is, if you're going to create a business or an idea, let it be incredibly unique, and you have to know if the timing is there for the market that the audience that you're going to serve really wants that thing. But yes, a recession or a down market is absolutely the best time to start a business.
I mean, Troy and Rashad, come on. People, I can't tell when people say, man, and when you talk to them, ask them, should I start my business now? Yeah. I know MG gets this a lot. Is right now the right time to buy? Ian, you get this. It's right now the time to buy a stock. So I know people want one answer for everybody, regardless of the situation, but can you give us some context, some nuance, and an answer?
I feel like, business is for entrepreneurs. And if you're an entrepreneur, it's never a bad time. It's always the right time to start a business. It's like asking a basketball player, is it the right time to play basketball? If it's cold outside, you want to go in the gym. If it's hot, you want to go outside on the court. Either way, if you play basketball, it's never a bad time to take shots. So I feel like if you're really an entrepreneur, there is never
bad time.
The right time, bad time. You just start. And, you learn as you go. You make mistakes. You have to be prepared. That's one thing that you should always prepare yourself for. But I think, a lot of people get caught up in analysis paralysis, and it's like double dutch. It's like, now it's not the right time. And I'm going to wait for this economic environment to get better. I'm going to wait for the summer. I'm going to wait for Christmas season to come. I'm going to wait for, it's like you keep waiting for years. So start. That's how I look at it. And that's something that, we always did. As far as entrepreneurship is something that I've been doing pretty much my whole entire life. So there's always opportunities in every crisis. You just have to be able to see it. So I think now is the time, but it's always the time. It's always the time to start a business. So if you're really passionate about entrepreneurship, understand that, it's a lifelong journey. and it's not something that you just do one time. It might work out, it might not work out. That doesn't mean that you're not an entrepreneur anymore. You just gotta try your hand at a new business.
Yeah, I'm 1000% agree with both gentlemen. I've been on both sides of it. I've been, and working a 9 to 3 in education for 12 years, and I've been an entrepreneur solely for the past 4 years. And so the right time is when you start, right? And so I always lead with start where you are, use what you have, and learn as you grow. And that's what we got to really understand, is that there's going to be mistakes, there's going to be pitfalls, but that's part of the journey. The journey is the beauty in creating business. And I think, especially what Ian was talking about, especially in recessionary environments, it's like, yeah, that was the perfect time that you realize that your one income might be too close to none. Yeah. So how do we scale? How do we grow more business? How do we find something that adds value to a community? I think one of the things that, we had an advantage of was that we weren't creating a business to say, all right, we're going to make this $1 million media company. We were just saying, all right, let's create something that adds value to people's lives, and let's see how disruptive we can be. And the disruption is what caused the people to gravitate toward it, because it had been nothing they had seen. And so I would, suggest, even if you look at the largest companies or, the most disruptive companies over the past 10, 20 years, Uber comes to mind, right? Like these things, these things come to mind. It was disruptive. It changed the way we were doing everyday life. And so if you have a business or you have an idea like that, go with it, right? Like the best time is now to start.
And can I chime in really quick? We have to stop taking time for granted. Like, imagine if Joe Rogan, The Rock, and Jason Momoa got together 3 years ago and did an investing podcast. It would have been kind of tough for us. Like, we have to stop acting as if we have a bunch of time available, because there's like 7,000 other people that are thinking of your idea. Maybe they have a connection with Andreessen Horowitz or a big venture firm that can get more funding and execute faster than you can. I see a lot of times people have really incredible ideas, and they may wait 2 or 3 years too late to launch it. And now all of your competitive advantage has been eroded and eaten away.
Yeah. I mean, listen, when it comes to like an investment podcast, I think you guys might have The Rock, Jason Momoa, and Rogan.
Thank you.
In a fight, I don't know, man. Two of them dudes is big. So.
Is it WWE?
I don't know what the rules are. You brought it up. No, on a serious note.
We're taller in person.
I say the same thing. On a serious note, though, and I've heard you guys tell the story about how you guys started Earn Your Leisure and Market Mondays, but if you guys give people a sense, did you bootstrap it? Did you fund it yourself? Was there somebody else that gave you some outside investment? How much money did you actually start with? Because again, I get so many people asking about entrepreneurship and want to talk to you guys about it.
We started just our own money. I mean, the good thing with starting, the type of business that we have is that it's low cost. So it doesn't really take a lot of money to start producing content. You can actually produce content for free. So we started with just us and a couple other people that added their level of expertise. That's important, to have people that know what they're doing to work with you, either in a partnership or, you pay them or, however you can figure that part out. You're going to need other people. You can never do anything by yourself. Right. But I think it's important nowadays more than ever, when you're starting your business, to try to start businesses that are have low overhead and are scalable. So those are two things that are extremely important. So when you look at like with our space, it's low overhead and it's scalable because there's no walls, right? So we produce content for a living. So that's not a lot as far as on the production side, but the content can reach Africa, it can reach Asia, it can reach any part of the world. So it's scalable, as opposed to us having a clothing store in our neighborhood, which would be a lot more on the overhead side, because we would have to pay rent, we would have to pay employees, we would have to pay the light bill, the heat bill, we would have to pay cable to have a television on. But the reach would only be, a 10-mile radius, unless we set up systems in place to, ship overseas and have online clothing boutique and different things of that nature. So I feel like, a lot of people are limiting themselves to restaurants, different things of that nature, where it's high overhead and have low chances of scaling, where we want to do the exact opposite. We want to have low overhead and high chances of scaling.
Yeah. And it goes back to what we said, like, let's start where you are. And Frank, you've been here, so you understand when I was talking about start where you are. right? Like we're exactly where we started as far as location, but we use what we have. When we started, we didn't have the best cameras in the world, but we did have a device that had a camera on it called the iPhone. And so we use that. And then we didn't understand, the recording equipment, but we had to learn how to do that. So I had a computer. All right, well, that's what we're going to use. And so we've grown through that process. And I think most people, they want to start at the finish line, right? But the beauty of starting at the beginning, like kind of how we did in Bootstrapped, is that people get to see you grow. And as you grow, they appreciate it more because they feel like they've been with you from the start, and they've seen the growth, and they've seen the maturation of the company, but they've seen the maturation of the two people and the company that's being built in front of them, which, probably it's tough, right? You don't get to see Apple when it started in the garage, but you get to see on your leisure when it started in the dining room. And so that's one of the advantages that we have.
Ian, you got any thoughts about starting a business right now? I mean, and also taking out loans or financing or using credit cards. I know a lot of people nowadays also use credit cards to start businesses. What do you think about that, just as far as when you start the business, starting with that level of debt?
I know it's a hot take, but I don't think you should start a business with a loan or debt. To me, it's a huge mistake. I think a lot of times, and going back to what Troy and Rashad said, like people confuse having a bunch of tools. So even on the trading side, people ask me, hey, do I need 3 monitors? Do I need like an NVIDIA graphics card that costs me $3,000? Do I need a custom built computer? I'm like, no, start with what you have, and then earn your way to profitability to be able to buy the other items that you need, because the consistency is way more important than the tools. But me personally, I don't have any personal debt or any debt in a company. I know some people have other takes and other thoughts, but when a recession hits and those loans get called, it is not a great feeling. And it also allows you to scale your business in a different fashion and make very, very long-term strategic decisions when you don't have debt. There are certain deals that you don't have to do if you're like worried about paying off a $15,000 recurring debt that you do have versus if you don't. So I'm anti building a business off of a loan. I think you should build it off of your fan base, off of your customer base, and then kind of bootstrap and scale your way up then. Now, can you take on venture capital later? Yes, but I think even those terms need to be favorable for you so your company isn't being taken over from you.
Yeah, really interesting thoughts. I think a lot of people are trying to make their way on their entrepreneurship journey and figure out how to start their business. And I think you guys made a great point about social media putting pressure on people. People see other people posting content, I'm an entrepreneur and this, that, and the third is happening, but it takes time. It takes effort.
Yes.
And you got to remember the majority of businesses fail. I mean, it's just the reality of it.
The majority of people on social media that are posting that they're doing really well, they're not. Go ask their family members. They'll clearly tell you, hey, their business isn't doing $9 million a day, how they're saying that they're doing on TikTok. Just follow your own and run your own race.
All right. Speaking of that, on April 4th, join us for our next edition of Equity and Opportunity, where we'll be digging more into ways to bridge the racial wealth gap. You can register at cnbcevents.com. You see our list of guests that include Thashunda Brown Duckett of TIAA and Michael Heider of the Executive Leadership Council, Rick Wade of the U.S. Chamber of Commerce. Also want to mention Market Mondays airs at 8 o'clock tonight Eastern, 7 o'clock Central on YouTube, Spotify, and other places where you get your podcast. All right. So before we let you guys go, let you guys get out of here in a minute, I was like, hey, send me a topic you guys want to talk about. I know you guys are in Mexico and Puerto Rico. You have better things on your mind. You have other things to think about. Troy, what's going on, man? Is there just something that people aren't talking about? It can be business, just in the world of just what's going on in the world. Like, is there something that's on your mind right now that you think people should pay attention to when it relates to their money, at least?
That relates to their money. I think that conversation, and I'm glad that we're having it now, but this AI conversation is something that we definitely need to be talking about from a number of standpoints. But I think the number one piece, and I'm always going to talk about, is the education. I remember, growing up and being able to teach kids. One of the things that we talking about when we spoke about technology was coding, and coding is great and it's a great skill. But from an educational standpoint now, there's a shift that's happening. Web3 is happening, whether we like it or not. Understanding what AI is, it's happening whether we like it or not. And so getting trained and getting a full understanding of the space in a manner that we can actually teach it and educate the younger generation so that we're not left out of the technology conversation going forward. I mean, if we look at the past 30 to 40 years about the sector where people have accumulated the most wealth is technology by far. And so we want to make sure that we're part of the conversation. We want to make sure that we're part of the decision making. We want to make sure that we're part of the innovation as well. And so I think the education around these spaces is vitally important.
What about you, Rashad? I mean, anything you're thinking about that you think people should be paying more attention to when it comes to their money? It doesn't have to necessarily be investing, but just things that are impacting people's pockets that maybe they need to put a little bit more thought into.
Yeah, I think inflation is still an issue, and that's still something that most people are feeling on a daily basis, whether it's at the gas station, whether it's at the grocery store, whether it's sending your kid to college. The cost of education inflation has actually been almost double the cost of regular inflation for the last 30 years. So inflation, I think, is something that is extremely important, and this is why it's important to find ways to make more money over the course of time, but then also try to find ways to invest and earn money, because $1 today isn't going to be worth $1 tomorrow. And if your income stays the same, or if you're having a 1% raise in your salary every year, then you're going to find yourself in financial hardship because your buying power is constantly being decreased. So I think that that's something that's extremely important, and another reason why entrepreneurship is vitally important, and why investing is vitally important for everybody, even if you think that you're not the most passionate person when it comes to finances. You have to find a way to make more money and to earn more money on your money that you have sitting, because inflation will not stop, and who knows when it will cool off. We've seen some level of cooling off, but there's no guarantees, right? We could be in a high inflationary environment for years. So if that is the case, we have to find ways to beat inflation, and there's only a few ways. So we have to find ways to make more money, and we have to find ways to invest money as well.
And what about for you?
Oh man, I have 3. Is it okay?
Yeah, go ahead.
Number 1, I'm worried about the slow degradation and corrosion of the American capital system. We need more companies that are more innovative, that go public, that have a big impact. And of course, the angel and VC structure has a big impact on that. But over the next 20 years, I'm very worried about the country if we don't see more innovation come from the companies that are funded. Number 2, we need more scientists and researchers, because COVID, although it was incredibly deadly, it wasn't as bad as it could have been. We don't have enough American kids that want to be scientists, doctors, researchers. So let's just say, like, hypothetically, if there's an aggressive form of like Toxoplasma gondii that develops over the next 10 years, which is like a parasitic brain worm or infection. If we couldn't handle COVID, let's say in 2034, that hits America, what preventative measures will we take, or what cures will we have for that? And third, I really believe that we have to reform education in a grand scale part of what we do. There are some incredibly talented, bright, ambitious kids, but we're teaching them in a fashion that's like 100 or 150 years old. I was talking to a lady earlier today. She's 21, just graduated. She's at a radio station. She's like, well, I don't know how to make my way in corporate America. I'm like, you're great at social media. Like, you can go to 50 companies in Houston alone and get $5,000 a month out of them if you can help them and have the systems in place. And I feel like our kids are being lost in the educational system, and they're not being seen or heard or given to be successful business owners, entrepreneurs, and of course, like, tax-paying citizens to this country. So, like, those are the 3 things that are on my mind, and whoever creates some solutions for them to have a multi-billion-dollar enterprise or multi-trillion-dollar enterprise.
So, I mean, is that about people learning this in high school, upskilling of existing workers?
I think we need to start in 1st, 2nd grade, to be honest. Because by the time most kids get to high school, they are either on a path to go to college or they're already checked out. I mean, when I graduated in 2000, I can think of the kids who had given up on American education probably in 8th or 9th grade because it wasn't challenging, or it wasn't fun, or there was no direct correlation to, if I do study this hard, I will be able to make X, Y, Z amount of money. And this is why investing is so important, because like Rashad said, you can't outpace inflation. But if we look at colleges, right, what is the return on investment that you're getting from going to a 4-year university for most people from 2018 through now? Most of them are running negative. We need major reform. And I'm not running for politician or office, right? But we do need education reform at scale.
That makes sense. I mean, I think education is an important thing, but I think you're hitting on something. A lot of people go to college and just take out a loan and say, hey, I'm going to get a degree, but they don't really have a plan of what they're going to do considering the amount of debt they're taking out. And a lot of times get into fields where it's going to take them a very long time to pay that debt back down.
Absolutely.
So I just got a general question for you guys. This is just a fun one. This is something just pretty light. Whatever happened to earn your love? I remember.
Whoa, Frank! You said that in the past tense. What do you mean? What happened to it?
I haven't heard anything about it. Maybe I missed it.
Everything's top secret, Frank. You know that. Stay tuned.
It's on the way.
They don't do like me. I'll announce everything before it's done. They'll wait until they're actually done with production. So,
well, I mean, it wasn't that secret. Rashad was on the Kendra G show talking a little bit about it, so it wasn't top secret. You know what I mean? Yeah. The file, if I went to your house, the files are in your closet. You know what I mean? But on a serious note, I was asking because I mean, I'm on social media like everybody else, and there's so much content about relationships nowadays, and you need to date a high value man or a high value woman, and this is how much somebody needs to make. Where do you guys weigh in on all this? I mean, there was a very controversial person who passed away, a fraternity brother of mine, Kevin Samuels, who kind of coined some of these phrases and brought this into the culture, and has really seemed to take hold. And a lot of people are making life and even sometimes investment decisions based on their relationships. So, I mean, Troy, I'm gonna start with you. You're a happily married man. What's your take on all these conversations going on out here just about relationships and finance being intertwined?
It's interesting, man. I feel like I get to watch from the bleachers as these things are being played out. I've been married for 10 plus years. I've been in a relationship for 15 plus years. And so I think, especially when it comes to finance, the communication piece is the most important in understanding the value system and understanding how to relate to each other on that level. I know that, when people think about relationships, they think it's just a physical relationship or it's an emotional, but it's a spiritual one and it's a financial one as well. And so when you understand roles inside the relationship, I'll always, use the Bible. I always say, look, man, if we know who's leading our relationship, God being the leader of our, my union, then you should understand that any decision that I make is going to be for the best of both of us. Now, watching, some of my peers, go through relationships, it feels like there's been a change in the way relationships are being viewed and how they're being valued, which is, it's interesting to watch because I have children who are growing up in this environment, and eventually they'll be, at the point where, they'll be trying to, create a union. So it's interesting to watch, but I think that the most important thing is having full transparency and having, honest and brutal conversations when it comes to everything, obviously from an emotional standpoint, but from a financial standpoint, because again, and you spoke about student loans, but marriage is a financial decision as well. And it could, it could be detrimental or it could be something that's mutually beneficial and beautiful.
So Troy, when do you have that conversation? I mean, is it, after a week, after a month? How do you broach this? Where's your credit? Where's your debt? Like, how do you even start that conversation?
I think you have it over the course of years. So I was fortunate, right? I dated my wife, for 3 to 4 years prior to even getting engaged. And so I always, when people always say like, you were with me before I had anything, like before I even had a career as a teacher, we were together. And so, she's been with me through the financial milestones of my life and vice versa for hers as well. And so it was something that just kind of naturally happened, and it felt like we were in this together. I remember, trying to take courses to earn extra money in teaching, and she was like, "Well, if you're taking the courses and you don't have the time, I'll help you with it." And so it becomes a partnership in a sense where it's like we're helping each other for the betterment of our family and our future family.
So Rashad, what about you? I mean, how intertwined are finances and relationships for you? When do you start these conversations that people are having? They're talking at people on social media. But if you're in a relationship, when do you talk with the person about your finances and have some of those what could be difficult conversations?
I think each situation is going to be different, but I feel like it doesn't necessarily have to be a difficult conversation. It's only difficult when you're like attacking somebody or maybe probing a little bit too hard. But you just have a general conversation is to say, okay, well, what's your financial goals? Have you ever started a business? How do you feel about credit? How do you feel about, and that could just lead to a conversation. And then from there, you can kind of just, navigate your way through it. But I think it is important to find out different people's expectations. You don't want to get married to somebody and not know that they want to have a joint bank account and you don't want to have a joint bank account. You don't want to get married to somebody and then find out that, you know, for them it's extremely important that, you know, the man pays all the bills and you're thinking that we're going to split everything 50-50. So, you know, these are things that you just have to kind of have some level of understanding about. But I think that a lot of times you don't necessarily even have to ask the question. You can just be observant and listen to what people say and kind of watch what they do. And then from there, you can kind of, you know, have a good understanding of somebody as far as, you know, financially, right? Like you can understand, okay, this person, if we're going out, this person doesn't even have a credit card. You know, they might not have the best credit, or they might not be the most educated when it comes to credit. That might not necessarily be a terrible thing because that provides you an opportunity to educate them, right? But you just have to know that going into it. So these are things that I think are extremely important. And you know, I think social media has provided a platform for everybody really to give their 2 cents. But I think it's beneficial though, because I think that now we're starting to see that, you know, so many different people have so many different opinions, right? When it comes to relationships. So this is why, you know, Earn Your Love is on the way.
Listen, don't spill the secrets. I didn't mean to let the cat out the bag. My bad. Ian, I know you got a take. I know you got it. I mean, I've seen some things you posted on your stories. You said it was your homeboy that posted it. You just reposted it. But I mean, all this intertwining of relationships and finances, is it actually a good thing?
From a business perspective, I'll take it first. So of course you had Kevin Samuels, you had Andrew Tate, who's in some hot water now. There's a lot of red pill, black pill talk. I think it's very interesting that Bumble or Match, ticker MTCH, has not grabbed any of these people with large audiences to bring them over to their platform. I think it's a huge mistake on their end. As far as the relationships and finances part, I think you have to have those conversations early on if the vision matches. Like even in a past relationship, what was Xander's mom, like she was more conservative. I was a little bit more aggressive. I was more, hey, let's build a business. She was like, hey, I want to go on my path and continue to be a doctor. So those conversations are important to have. And as being a leader, whether the relationship succeeds or fails, it's ultimately up to us to guide and also have those tough conversations and knock them out early. So I think the biggest thing that we're seeing on social media with all of these conversations around love and relationships and high value men versus what women should do, etc., is our generation is more connected to people than ever, but we're probably the loneliest we've ever been with the least amount of love. I think the first creator or platform, Hinge, contact us, Bumble, contact us. I have a couple ideas for you. Finds a way to get people to communicate well and pair people who actually want to be together and build great bonds. Multi-billion-dollar business. We're seeing a huge disconnect in humanity over the last 10-15 years because of social media, for sure. I kept it clean, Frank, and that was my friend's post. I just reposted it to help his engagement as a good friend.
And Ian, as I told you before, in the nail shop, they're not saying, "Oh, Ian's homeboy posted it. He just reposted."
I'm sorry, Ian. I'm gonna do better. I'm going to do better. I'm doing the work. I've changed. I'm sorry. I admit my faults.
I think we better leave it right there. I'm gonna give you guys just really quick. Any last word? Before we even give you last word, Market Mondays tonight, 8 o'clock Eastern, 7 p.m. Central. You guys going to share your insight on the news of the day, some other topics. I know you guys mentioned AI might come up. You can watch it on YouTube and also on Spotify. Also want to mention our event on April the 4th, Equity and Opportunity, where we're trying to close the racial wealth gap. Our guest, yes, at April the 4th, correct. Equity and Opportunity Forum, Thashunda Brown Duckett, Michael Hyder, Rick Wade. Please join us. You can scan the QR code if you'd like to join us. And we're going to leave things here. One last word from you guys. Troy, just one last word for our CNBC audience.
Yeah, I want to thank you, Frank, for always being gracious with your time and inviting us to the platform. Every time, there's an opportunity to champion, the mission that we're on. I feel like you've done a great job, showing up for us and showing out for us, even, to the point where you hosted it at InvestFest for us, which is our annual event. So I want to thank you and CNBC. Obviously, it's a resource that we use and I use every single day, and look up to and admire a lot of the people from there. So first of all, thank you. And the mission of our that we've been on, and I speak for all of us here, is to financially, educate our people so that they can change the trajectory of their lives and the future lives of their children, right? So it's about generational wealth, but it's also about sustainable wealth. And so if we can equip them with the tools, you know, and everybody's on that same page, and, you know, you're part of the mission. So I want to thank you wholeheartedly.
Oh, man. Thank you for letting me be a part of it. Rashad, one last word.
Once again, thank you. But, you know, for us, financial literacy is extremely important. So just want to encourage everybody to, you know, continue learning, never get discouraged. You know, I know it's tough times right now for a lot of people in this economy, and, you know, forecasting that it probably get worse before it gets better. So understand that, you know, nothing happens overnight. Wealth is not built overnight, but you can, you know, achieve success, and you can achieve, you know, your goals if you're disciplined, if you're educated, and, you know, if you have patience. So patiently persevere and continue to educate yourself and remain positive.
Ian?
Once again, thank you, man. I've been watching CNBC a long time, since Mark Haynes was hosting. So got to tell you, thank you for being an advocate, for having us on. And myself, especially with my salacious takes. I will not post anything crazy in the stories again. But no, thank you for having us on, giving us the opportunity. Also to Bono and Josh Brown, like some people who have been advocates behind the scenes. But I mean, it's been fun. I loved having a conversation with you guys today. Thank you for all that you do, being an amazing person, and everyone who's watched. I know last year was a tough year, but what I've learned from previous recessions and years where we had a great drawdown, the next year usually was pretty solid. But definitely looking 4 years back through every cycle that was down. I remember the night that Trump won and the market fell apart, and then by morning the market had rallied to an incredible high. I've always learned during these downtimes just to invest and hold for the long term. And if you look over a 4-year period, you'll be happy. There's not a 4-year period when I invested, I look back and like, why did I do that? So yes, hold for the long term.
Yeah, I think it's like a lot of things in life. You put the work in now and you get to reap the rewards later on if you're patient and disciplined and focused.
Yeah. And Frank, we'd be remiss as a Philly native not to congratulate you and your Philly.
Absolutely.
Oh man. See, I didn't want to get too controversial, man. A lot of Philly haters out here. Yeah.
Congratulations.
Will probably be yours.
Yeah, man. It's gonna be major. I mean, my prediction right now, final score 51-2. Like that's the final score. That's like what I'm seeing right now.
Let's call DraftKings right now.
But on a very serious note, I want to thank you guys. Rashad Bilad, Troy Millings of Earn Your Leisure, the master investor Ian Dunlap. You guys, Market Mondays tonight at 8 o'clock Eastern, 7 o'clock Central. I'm sure a lot of people here have discovered you. I'm hoping they're going to tune in. Thank you for sharing your point of view and your perspective with us. We appreciate your time as always. And thank you all of you for watching. We'll have many more of these Equity and Opportunity live streams coming up, and hoping the EYL and Master Investor, you guys actually come back. So we're hoping.
We'll be honored to.
Easy. Too easy.
Anytime you need us. Thank you.
All right. Thank you guys. Have a great day. And thank you all for watching. Enjoy your day. Happy Monday and good luck investing.